Hello and good evening to Lottie Dottie everybody. This is Tim Davis coming to you guys from the Bullish Bears team with another quick video review of the market. First of all, before I go over market update, market review, I want to just for you guys who don't know too much about the Bullish Bears team, please you guys follow us on YouTube, follow us on Facebook, and also visit our website. Our website is just as this that you see now, www.bullishbears.com. We have a lot of different information down here. You can hover over top of the tabs. You can see what we things that we offer, what we got going on, from just overall community information to our chat room, our trade room. You can subscribe your email address so we can keep you updated with the Bullish Bears team. We offer coaching, and let me explain something to you about our coaching so you guys, especially you newbies, if you don't know too much about charting and chart analysis, please, ask about our coaching and put your information down there, and we'll send you email back and explain to you what our coaching consists of. Basically, charting and chart analysis. All right. Also, follow us on each one of our social media websites, and if you go to hit about on our Facebook page, on our website, there's links down here that you can follow to our social media sites and just learn a little bit more about us. We have a actual Facebook group, Facebook page, Stock Market Community, which is what it's under, and our YouTube channel. Okay. All right. Now, with that said, let's dig into these markets. All right. Today is Thursday, August 10th, 2017. And as a lot of you guys know, these markets have been kind of volatile this week, to say the least. All right. And I wanted to point out a couple things, just so you guys can understand where we're at and where we may be headed in this market. This market, as you can see, is I don't think this market is I don't think this run is over. The overall run is over, but I want to point out a couple things so you guys can see that it's definitely time for a pullback, and just be prepared for what may be lying down the road, maybe in the next year or so. Well, who knows? Who knows? But let's just pay attention to this thing. Now, a lot of you guys who followed me last week on one of my videos when I spoke about a new indicator, not really new, but indicator that I've been starting to use lately, and which is the on balance volume. On balance volume, and what I did, I made it as an overlay over top of my RSI and over top of my Arun oscillator, which is over at the bottom. Made it as an overlay, and what I've noticed is, and I'm going to tell you what I'm looking at in a second. What I've noticed is normally on balance volume likes to follow the RSI, or likes to keep momentum in tune with RSI. As you can see here, when RSI was coming up on this particular index that we're looking at, so was on balance volume. Once they cross, normally you start to see some type of divergence where there's a change. On balance volume normally continues to go up, and as it reaches almost to the 100 line, which is 100 line of the RSI area, from 0 to 100, that's what I'm looking at on this side over here. And we'll start to see some type of pullbacks normally once this thing reaches all the way to the top. And what I'm looking at now is the S&P 500. This is a monthly chart of the S&P 500 dating back to 2012. Okay, and with this chart, I'm going to start here and I'm going to work my way down and point out a couple things just looking at this one. So as you can see, as I told you about the on balance volume, normally follows the RSI. See here, we got real close together, then it just dipped down a little bit. RSI dipped down and it dipped down with it. Then next thing you know, it started to go higher. RSI started to pull back up. But like I said before, that once it gets up almost to this 100, it has nowhere else to go. So normally it'll start to trickle down some kind of way. And RSI normally finds a way to follow. All right, so with that said, said, I'm going to point out a couple things on this chart. All right, I'm going to highlight a couple things. I'm going to annotate these things so you guys can see what I'm looking at here. All right, so now we're looking at this monthly chart. As I told you before, RSI and on balance value follows each other, and it's almost at a max point. So what do we get? Now we got our first. So far, we got a red candle here, and that represents the month we're in now. So right as of right now, August is is in a downward state. And as you can see, since last year, we had a couple dips here, but we've been running up nice since last year. However, this run is like it's starting to stall out. Got a lot of green months, one red month, green months. So about time for a red month. We may see a couple. We are almost overextended, like I said, up with the on balance value. We just about overextended. Let's look for this to start to pull back. So that's the signal right there on a monthly. Maybe I'm about to pull back soon. I'm gonna show you guys something else too. Back in 2015, the market started to trend downward. Nice little move up since 2009. Got up at around about 2015, and the market started to trend downward all the way to the middle of 2015. Then it went up. Then it went back down. 2016 hit the bottom of this 48-day moving average line, and then started to trend higher. Actually, if you look at the overall picture, the market gave us a sell signal way back here in 2015 that on a monthly basis that this market was getting a little weak. All right, so what happened? Had a little dip. Then we got a buy signal here. Market's going back up. But this is what I really want to point out. It's going back up. However, we got an overall sell signal here. If we don't reach back up to about this level, which I don't think we are, I think we're about to cross over here and probably go down a little bit more. This could do a pattern such as this. Notice how when we were in this big long run, went all the way up to the top, and this is the MACD area I'm looking at, y'all. All the way to the top here, got a sell signal and started to go downward. I don't think we're going to reach back up here to on top of this area we made, and it goes from negatives 20 all the way up to 140. Up and up here, then we started to trickle down, go up here. I think we started to trickle down here somewhere. And as you can see, look at the MACD oscillator. You see where we had this big move up, then the oscillator started to trend downward, up again, almost sideways, up again, like we may be ready to trickle down. Rune indicator, it looks flat here. Screen line looks flat. We may start to trickle down here soon. And one area I want to look at, which is slow stochastics. This run here, from here all the way to here, from here all the way to here, looks like a nice long run. Try to point it out a little bit better. Nice long run there. It's about right there. Then it started to pull back. Then we got a run started here. I don't know how much longer this run is going to be running. I think it's about to pull back right here. As you can see, there's a red line over top of the black line, which signals a sell signal, which means we may be starting to trickle downward. So that's what you want to keep an eye on. All right, so that's how the weekly chart, the monthly chart looks like. And let's look at a weekly chart of the S&P. Okay, we're gonna look at a weekly chart of S&P just to bring it closer to home, bring it closer to what's going on now. So I'm gonna change this to a weekly chart, and let's get it real close. So we'll do the past 2 years. Take a look at what's been going on and how we looking now. Now, same thing like I told you guys before. On balance volume, same scenario. We've been pretty much trending sideways here, and then it starts to go up. RSI starts to mimic it, starts to go up, and they meet each other right here. Up and down, up and down. Then they start to cross, and you get this divergence. On balance volume tends to trickle all the way higher until it gets up to the top of this 100 line. And we've been in this nice little oversold, overbought area for quite some time over the past year. On balance volumes up here at the top. I'm looking for a move to the downside. I think we're going to get this move to the downside. And so we got to pay attention to see how long that downward pressure could last. We got a red signal here, which is a week that we're in now. This week it's turned out to be a red week so far. We had a couple green weeks here, red weeks here, a couple green weeks here. But as you can see, this has been in this nice bull run upward over the past year. So we really haven't had a strong downward turn, except for this right here was pretty strong when we hit the 48-day moving average line. And back here too, I think this was probably back in 2016 when we made this drop, big drop. Started in 2015, dropped all the way down. In February, hit the 200-day moving average line. Then we marched up, and ever since then we've been, we stayed pretty much almost stayed above the 48-day moving average line. Hit it a couple times here, then we really took off here. So I think this market is almost exhausted. This big red candle here for this week. Gonna keep an eye on that. Look at the parabolic SARs, and I don't know if you guys saw my video before in the past about parabolic SARs. Once they start to get very, very close to the candlesticks, acts as an area of support. But there's a little dot on top of this one, as you can see now, which normally is a signal to the downside. So with that said, defensive strategies should be on, and there's a lot of things right now that can really, really help this market continue a downward pull. You got geopolitical risk right now. Earnings season seems to be starting to end. But I've been noticing a lot of these earnings. Some of these companies that have great earnings, even after their great earnings, they've been finding ways to sell off. So even after a big spike up, they start to pull back. So that's another signal. There's a lot of other things too that's going on within our world and our economy that should be signs of caution, not of worry, but of caution to start some defensive plays on. All right, now let's take a look at. Let's break it down. Look at the daily chart. Then we're gonna look at gold, and I'll be finished my market update for this week, or well, for this midweek anyway. I think I wanted to. Did I do that right now? That's not what I wanted to do. Stand by, folks. Let's look at a daily chart. For the past, let's go 2 months so we can see where we at right about now. Daily chart of the S&P, and as you can see, we got this big red candle, which is the day. It was a monster of a day. Monster of a day. Big old downward move. Even broke below the 48-day moving average line. So made a drop below all of these recent highs. So yeah, we dropped below quite a few recent lows. Drop below all these lows. That's normally a signal to the downside. Drop below the previous lows of this week. Drop below the previous lows of this week. That's normally a signal to the downside. So we'll see how that plays out. You got a sell signal here around about the 2nd of August, and we started to pretty much tip downward. In the Williams percentage area, we're already in the oversold area, so we'll see how long that lasts. Oversold area. And ADX negative, got the red on top of the green, so that's a negative signal. So we already started downward spiral this week. All right. Now, let's switch gears and look at gold. GLD is the ETF I follow for gold. So let's see how that's doing. Well, what do you know? It looks just the opposite of the S&P. Um, pick up, we'll move here. Pick up, we'll move here, almost up to this point. So we may see a little pullback in the gold. However, RSI looks very strong. Has not really been in the overbought area just yet. So this could trickle around up here for a little bit, and you might see more strength in the RSI to the upside. So we'll see how that plays out. This is on the daily chart too. My moving averages lines. What I'm using here is a 5, a 13 day, a 48 day, and a 200 day. My right now my 5, which is the shorter time frame, is on top. My 13 day is here. My 48 day is here. 200 day is here. This was trickling over, and then they all broke out, and they all starting to separate. 5 is on top. 13 is right below that. 48 is here, and they all starting to separate now and go higher. That's a good sign for this gold market to go higher. All right, so with that said, I'm looking for gold to continue to go higher. It might be a good month, and maybe a good quarter for gold. Yeah, this chart looks pretty good to be getting some momentum to the upside. But that's the daily. Let's look at the weekly for gold. See how the weekly charts look. So let's take a look at the weekly charts. And we're going to look at the weekly chart for over the past. Let's take it back for at least a year and 6 months. And then I'm gonna look at gold on the long term too. Let me show you guys something interesting that's starting to form. All right, gold had a nice big dip. 2016 started to march up. This gold ETF got up to about 131. Then it made a big sharp move down to the end of 2017. Started to march up, but then it got stuck in this funk. This upward and downward pattern, upward and downward pattern, and it's hanging around. All the three moving average lines are hanging around each other. Tight group here. I'm looking for this tight group to break out. 48 day, this 200 day is still trying to hold everything down. But we just broke above this 200 day one more time with this big green candle here, which is today. Broke above it one more time. We had parabolic saws, which had a downward move to the downside, which represents this move. But look what happens. It's touching the top of this green candle. So I'm looking for this downward move. This downward move to be over. Upward move to start to resume. This is on the weekly chart. So this looks like strength to me. Looks like strength. We can start to see this gold market continue to go higher on a weekly basis. And as soon as we clearly break above this 200-day moving average line with a green candle, I think it's off to the races for gold for the next couple of weeks or so. So we'll keep an eye on that. And let's look at a monthly chart for gold also. So I can point out some things, and we're going to go back here for a couple more years. I'm even going to go further than this because I want to point out something to you guys and show you guys something. Let's go back about 8 years. All right, something interesting happened with gold, y'all. I think gold is setting up for a run. So since 2009, back in 2009, gold shot up for quite some time. Then it went into this big pullback starting in 2011. Big old funk, 2011. Down here, dip, 2016, all the 2016 had a nice dip, went up, down, up. I believe gold is about to go higher. Okay, I don't know if we're going to get back up to this level just yet, but I believe it's going to go higher, and this is one of the reasons. I told you about the parabolic, about the not the parabolic size, but about the on-balance volume. When it tends to go skyrocket, normally the price follows, RSI follows, and you had these big old overbought areas up here. On-balance volume followed till it got up here to this tip top, and it starts to trickle and go downward. RSI starts to back off. On-balance volume starts to back off. And we're around here, just above this 30 line. I think it has enough momentum to pick up and start to go back higher. So we have to see how that pans out. And with the Ichimoku cloud, you also see that we're right here at a point of resistance on this monthly chart. And I kind of believe it's about time really to break through this cloud. A big old downward move here as the parabolic star is starting to get the top, reach the top of that candle. I think we're going to break out here and go to the top side. I mean, at least pierce this cloud and start to go higher. So we have to see how that pans out. Could be heading back up into at least around this 130, 131 area. All signs point to this gold going higher, especially with the geopolitical risk that's going on. And as MACD, look at the MACD. MACD also shows it just tipping above the zero line oscillator. Just ready to tip above. You got the black still on top of the red, ready to tip above and go higher. Williams percentage showed some downward movement here. Now look like we're ready to go back up to the upside. So I'm looking for this gold market to continue to go higher, you guys. All right, so that is my market update for this week. I'm going to do another video here in a second. Look at some particular tickers, things that I've been watching and I've been playing, and I'll put that on another video for you guys who know I've been into GLD, been into TLT, and I just picked up another couple more tickers, and I'm going to go over those trades in a second. All right, until next time, you guys have an awesome day. It's Tim Davis from the Bullish Bears team signing out.